Hello everyone out there, Peter Harris with Commercial Property Advisors. Hope you're doing well. I want to pose a question to you. Is it possible to have a 10-unit apartment building that maybe you purchased for $1 million and it cash flows a couple of $1,000s a month, right? Is it possible to pocket all that money tax-free by the end of the year? Yes, it is possible. But what if I were to add that not only can you pocket the cash flow tax-free, but you can also get a huge tax refund check at the end of the year. I'm talking tens of thousands. Is that possible? Yes, it is. Let me say this. If you are a real estate investor of any type, okay, of any type, and you're still paying income taxes, it's because you're choosing to do so. Okay? In this video, what I want to share with you is how to get a huge tax write-off that the IRS wants you to take. In fact, they expect you to take it. But many of you don't take it because two things. Number one, you don't know about it. Or number two, you think that tax strategy is for the ultra rich. And it's not. Every day people take it, like our students. They take it every single year, right? What I'm referring to is called cost segregation. It is a tax strategy of accelerating your depreciation. Let me explain, okay? The title of this video is called Cost Segregation Made Simple. Let's see if I can simplify it for you. All right, I'm going to start on this side here. As you know, the IRS allows you to depreciate your building, not the land, okay? So when you purchase this $1 million building to 10 units, you can't depreciate the land, so we'll take off 20% of the value for the land, and this building is worth $800,000, okay? Now, the IRS allows you to depreciate this building over 27 and a half years, okay? So we're going to take the value of the building, $800,000, divided by 27 and a half years, and we can get a tax write-off for a depreciation of $29,000 per year for 27 and a half years. That is a fantastic thing, right? So you better be taking that if you're a real estate investor. No matter what type of rental real estate you have, you should take this. That's free money waiting for you, okay? Now, what cost segregation is this is what we call this 29,000. We'll call this straight line depreciation. Cost segregation is accelerated depreciation. Okay, where instead of depreciating it over 27 and a half years, we can depreciate parts of the building over 5 years. Makes a huge difference, right? Huge difference. By the way, this is the reason why Donald Trump doesn't pay any income taxes on his real estate. He pays taxes on his businesses, but on the real estate, probably a big fat zero, even negative. And this is the strategy that he uses. He makes millions of dollars a year in cash flow, but pays zero income taxes. This is why. Okay. Now let me break it down to you. Accelerated depreciation is called cost segregation. It's a study. It's an engineering-driven study of the building. You hire this firm, a cost segregation firm, that will come out and they'll do a study for you on the property. What they would do is they will separate or segregate this property into 4 components: the land, the building, the land improvements, and the personal property. Okay? You know what the land is, right? You know what the building is. Land improvements are the walkways, the parking lot, right? The fences, okay? All that you can write off, okay? And then the personal property, this is what got me, was you can write off personal property. For example, I had a 44-unit property that I did a cost segregation on, and of course I had 44 wash and dryers, I had 44 stoves, had 44 refrigerators. All that add up to hundreds of thousands of dollars that I can write off over 5 years. Mind you, I didn't purchase all of those appliances, it came with the property. But that's the beauty of this cost segregation, okay? It's a gift from the IRS, okay? All right, and so these two things, the land improvements and personal property, account for about 30% of this $1 million. So you can write off 30% of this $1 million over 5 years. So 30% of $1 million is $300,000. So you can start writing off this $300,000, right? Divided by 5. That's $60,000 a year. So you just doubled your depreciation, and I'm not including the building. I'm only including the land improvements and the personal property. This is huge. This is huge. So why would you take this money now instead of over 27 years? Well, we have inflation happening, right? So the longer you leave your money in the property, the less it's worth. And number two, if you have the skill set of taking this money and multiplying it with commercial real estate, why wouldn't you do that? Okay. Now, there's it's called the Tax Cuts and Jobs Act, something that Trump did back in 2017, right? Where it's called bonus depreciation. Okay. This is very powerful. Okay. This is why I'm doing this video, right? Let me show you what that is. Okay. Now, this 30% is $300,000. Under this Jobs Act that started in 2017, you can take this entire $300,000. Watch this. You can take this entire $300,000 in year one. That's right. In the first year you own the property, and you've only owned it for a few months, you can take this entire $300,000 and as a write-off in year one. So here's what that means. If you are in the 40% tax bracket, let's say you are, right? So this is $120,000 in your pocket because of this tax write-off on this property. Is that powerful or what, right? So again, this $300,000 goes immediately against your adjusted gross income. So if you make, let's say you make $200,000 a year, right? And you take this $300,000, right? That means you're getting a tax refund check of $100,000. That's incredible, incredible. What you should do with that is buy another property. That's what you should do, okay? So this year one here is called bonus depreciation. That's the specific word that the IRS gives it, and it's a bonus for you. Now here's a disclaimer. I have the word disclaimer here. The disclaimer is this bonus depreciation will start to fizzle out at the end of 2022. So in 2023, it's going to drop maybe, I think, 20%. So each year is going to drop until it no longer exists. So you know what that means? That means you need to have a sense of urgency, right? To buy your commercial property now, right? Cash flow it now, do a cost segregation now, get the tax refund now, and buy another property now with this, because it's going to go away. Just the bonus depreciation is going to go away. You'll be able to do the $300,000 over 5 years, but this bonus depreciation year one is going to slowly go away. So get started now. All right. So now I just made it as simple as I can of cost segregation using a 10-unit property. Okay. Now let me share with you what if we were to do this on a 100-unit property. It will astound you. Let's do that next. All right, here I want to share with you the power of cost segregation if you have investors or if you have a large property. Okay, so in this example, I'm using a 100-unit property that was purchased for $7 million. Okay, and again, you probably recognize this. So for cost segregation, we are segregating or separating the property into land, building, right, the land improvements again, which is the walkways, the fencing, the parking lot, and the personal property, right, like the refrigerators, the dishwashers, all those personal properties in the building, we can write those off over 5 years. So we're going to take just these two things, okay, the land improvements and personal property. So 30% of this $7 million is $2.1 million, okay, so we'll be able to accelerate the depreciation, right, and write off $2.1 million over the next 5 years, which equals roughly, I'm just trying to break it up to you in equal years for 5 years. So every year we have write-offs of $420,000. Is that huge or what, right? So imagine this $420,000 goes directly against the adjusted gross income. So in theory, you can pay no taxes for the next 5 years, okay? Now, let's say you have a partnership. You bought this building with 10 investors, okay? So 10 investors each put in an equal amount of money as a down payment, and you're one of them, okay? So you're included in this. You have 10 investors, all right? And then, so what we're going to do, we're going to take the bonus depreciation. We're going to take the entire $2.1 million in year one, okay? So each investor, if I take the 2.1 and divide it by 10 investors, it comes out to be $210,000 that each investor gets year one. So 210, everybody gets the $210,000 depreciation. So for the 1 year. Now, what if these two investors, they make $80,000 a year, for example, their adjusted gross income. They can use this 210 to wipe out that income and pay no taxes, right? So then that means they'll have basically $130,000 left over. You can spread it out. So this 210, if you don't use it all in year one, you can use it until you use it out. So years 2, 3, 4, 5. So this lasts until you use it out. Use it up. Okay? So imagine having your 10 investors doing this bonus depreciation, and at the end of the year, tell them that, by the way, you're not paying any income taxes on the cash flow I sent you, and also you can use the extra depreciation here to wipe off your personal income too. Is that incredible? So the question is, what is this worth to your investors? It's worth a whole lot to know this stuff. It's worth a whole lot. Okay? So I wanted to share this with you, how powerful this cost segregation can be. All right. Now, with every good thing, there's also something that's negative, right? So there's pluses and minuses, there's pros and cons. All this is just not all chicken and waffles, right? It's not, right? So there's some good pieces and there's some bad pieces. There's pros and cons. So next, I'm going to share with you what the pros and cons are. And it's really important, right? It's not all roses here, right? What the pros and cons of doing cost segregation. Let's do that next. All right, I want to wrap up this video here by sharing with you the pros and cons of doing cost segregations on your property. Okay, there's the good and there's the bad. All right, I'm going to start off with the cons, and these are things that people never really talk about when considering doing cost segregation, but I have to. All right. So start off with the cons. First of all, it costs money to do cost segregation, right? The first example I had of a 10-unit $1 million property, it's going to cost you between $4,000 and $5,000 for that study to do. But it's worth it, right? To save $300,000 and you only spend $4,000 to $5,000, that's worth it. But be prepared; it can cost more. For that 100-unit property, it'll probably cost about $20,000 to do that study. But look what you save. Okay. All right. So that's a con. Next, this is depreciation recapture. No one ever talks about this. When you do a cost segregation or when you depreciate anything in real estate, when you sell the property, there's always a recapture component to it, right? So in cost segregation, it's huge. Well, any depreciation recapture is huge, right? And so in this case, you're gonna write this off over 5 years, huge numbers. But if you sell the property, you're going to have to recapture that. I don't know, 25-30% tax rate on that recapture. But anyway, it's something people don't talk about, but you do have to consider that, right? So some people say, Peter, don't do a cost seg because at the end you have to, pay it back. I have two thoughts on that. Number one, I look at cost seg as a zero interest loan from the government. That's how I think about it. Number one, and number two, the money that I get back, I'm immediately buying another property or increasing my return in the property to make it cash flow more to pay for the recapture expense, right? That's how you have to think about it. Think about it like a winner. It's how winners think, okay? Number three, the third con is if you're too aggressive on your cost seg study, right, and you're writing off too much, the IRS may penalize you. Okay, and so you gotta be careful with that. That's why in my opinion, you should not have your accountant do your cost segregation. You should have your accountant refer you to a company that's all they do is cost segregation studies. Okay, the study is immense. Okay, it's about that thick. It's a great report. All right, number four, the fourth con. If you're not a real estate professional, then you have limits on your write-offs, on your rentals, right? You guys know that, right? So there's limits. If you make a certain amount of money every year, you get no write-offs. So long as you're under that threshold, you can take advantage of this, okay? And number 5, the fifth con is bonus depreciation will phase out starting at the end of 2022. Okay, so in 2023, I believe it reduces by 20%, and then 2024 another 20%, all the way the next few years until it goes away, and it goes away. So there's a sense of urgency for you to take advantage of this bonus depreciation now. Buy your property, cash flow it, do a cost segregation study, get your tax refund, your tax savings, and use that money to buy another property ASAP this year. Okay? All right. Those are the cons, and there's quite a few, right? There's quite a few. I would say this one is the big one. All right? So here are the pros, and there's so many of them, right? You can see I'm a proponent for cost segregation, but I do take this into consideration, and you should too. Okay? Number 1, I look at cost segregation is not tax avoidance, right? You really can't avoid the tax because you have to recapture here. So it's not a tax avoidance strategy. To me, it's a wealth building strategy. Think of it that way, okay? Number 2, the second pro is you get your money out now rather than waiting over the next 27 and a half years to depreciate it. You get your money now. Now, as you know, inflation is eating up it's making everything go up. So the sooner you get your cash out now to buy your property, you're going to make more money, right? Because depreciation is going to have your value of the dollar go down, 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 down. Okay? All right. Number 3, doing a cost seg study may reduce your insurance premiums. And as we know, this year, insurance has skyrocketed on our commercial properties. Everybody, myself, all of our students, insurance costs have gone up, sometimes double, right? So cost seg may help you get those premiums pushed back down, okay? All right, number 4, if you are a real estate professional, okay, you have unlimited tax write-offs. So if you're a real estate professional, as deemed by the IRS, right, you have unlimited write-offs. That means you can write off everything. You can go cost seg crazy and cost seg every property and get all the write-offs. And again, remember in cost seg, if you have, it produces paper losses. So you may have made $200,000 in cash flow, but on paper, it will show, negative $300,000, right? So it looks like you're losing money, but on actuality, you're pocketing money. On paper, you're not. Well, that negative $300,000, you can carry over year by year until it's used up. So every year you make money, you can use that money to mitigate any tax you have to pay on dollars you made. Got it? Okay. So it's incredible benefits of being a real estate professional. I have a video that's going to appear on the screen about commercial real estate and income taxes. So the link will appear, and go watch that video. It's very informative. Okay. And number 5, I mentioned this a while ago, but this is really important. Okay. So if you're a syndicator or you have partnerships, right, this cost segregation can immensely boost your cash flow, as I explained, right? So all of these tax savings from a cost segregation, these tax write-offs, they can flow down and go to each investor individually, right? So your investor is a person, maybe with a job. Not only will he pay no income taxes on the profits you sent him from the property they invested you into with, but also on his W-2 job, that tax rate will flow down into his adjusted gross income and maybe wipe that off too. So he'll have all of his job income and real estate income and pay no taxes. That's the potential here. All right? Okay, so cons and pros. Which side are you? All right. So thank you for watching. I hope I made this simple enough for you. The title of the video is Cost Segregation Made Simple. I made it simple, but that's why I need to hire the professionals, because it's a very complex report, but it's worth it. All right, everyone. Thank you for watching. If you enjoyed this video, please click the like button, and also go to our website, Commercial Property Advisors, to see more videos like this. Thank you, everyone. Have a good night, have a good day, have a good year, and I'll see you at the next video.